Hey, what's going on out there? It's 2016. I hope everyone had a great weekend. Gonna do a monthly review. A new candle's coming out tomorrow, and it's gonna plop itself right next to this bearish double pattern. The S&P and the Dow both did the same thing. The only thing I'm looking at is it's still on the monthly. It's still above the support, even though we have another lower high and a lower low from the previous. So it's definitely bearish. I'm looking for the price to continue to close below the 17.3s, starting from the 17.4s. So if this can go lower, close below the EMA 8, 5, and 3. So this is the 8, 5, and 3. We can start to see some downfall. But you never know what's going to happen. I thought that during the last presidential election right here, it was going to crash, and I was short when it was below here. And what it did is made a triple bottom and continued to go up, so it knocked me out. But it's not looking the same, you know? We got a whole bunch of lower highs, where in here it just continued to go up. Where here we have the lower high that was put in. So just like before, when I got knocked out, it had triple bottom. Call these tri-tips. You get to 1 tip, 2 tip, 3 tips. And here's maybe a tri-tip top. You never know. But it's still at support. But the pattern is rolling over like a wave with the choppy top. You know, the white tops. You can see the waves crashing as the white tops form. So it looks bearish to me in the long term. The 2-bar pattern here is bearish, although that this did not, it's closing above the 50% line of this long candle. So in that sense, it's on the long side still, held up by support. So let's watch it fall below those slow moving averages there, and 50% of this candle. So below 17 on the Dow, and the same thing below 2000 on the S&P. So not too far away. It's, you know, it's right there. It's teetering. The S&P, another lower high and a lower low. So, and then last Thursday, let's just look at that real quick on a daily. Remember our call on the the hanging man, and it took off in the wrong direction, but made a double top. And on the daily, it practically closed below that hanging man, which we made that call. So that hanging man is still in effect. Watch the prices fall below, and again below 2000 on the S&P. And let's look at that daily on the Dow. And the Dow closed below the averages too. And you can see how the averages go up, above, and below. And now it's going to start going below. So it's going to catch some steam. The wave is crashing. The white tops are getting heavy. And it just snowballs after that. Onto the dollar. The dollar moved up last Thursday as everything crashed the last hour. We were still looking on a monthly. The monthly is still looking at a 4 top here. 4 tops. I don't see how this thing's hanging in there. But anything can happen, I guess, when you're printing money. So look for this thing to take off on the long side. It's closed well above its averages and the 50% of that last candle. Let's watch it test the 1050 mark, and if it breaks the previous high, then you should change your sentiment to long. But right now, even though this thing is just like parabolic, doesn't look like a real chart. I mean, during all our economic crises and whatever's going on, unemployment, and this thing just goes straight up. But you got to think, it's only compared to the other currencies out there. If all the other currencies are printing more money per capita than we are, then we're looking stronger, and that's really all this is saying. And another fact is they have to show the dollar strong so that they can keep silver and gold and copper down. Let's look at crude oil. It's still on a tether. You can see the tri-tips here bottom. We're not close to any tri-tips here. It looks like a continuation. Let's see if this thing could go sideways for a little while, consolidate and maybe move up a little bit, catch its legs. Here's a daily. It's going to have to come down here and fill this gap. But that could be that body inside that body, these two pattern candles. This this full body inside this full body is kind of a bullish harami, and not a strong signal, but if we can break this downtrend right here, stay above these averages, and watch the price come up to the slow moving average 34, we can see a pop in crude oil. But like I said, natural course of action right now is it's going to fill this gap, and we'll see how it does it. Maybe it'll do a stair step all the way down, like a consolidation, like it's doing now. Like a stair step, a stair step, stair step, stair step. And then it gets wound up in this little pattern, fills the gap, and then punches out of it. But right now, it's just looking bearish all the way through. Like we spoke before, it did have to go back to equilibrium, so it did. The price went to the previous lows, and now it can do what market forces are going to tell it to do. So right now it's in this is consolidating on a daily crude oil. See if it can break new lows. It just doesn't look strong at all. And it sure does look like the leading indicator on the strength of our economy, because that is looking like a continuation monthly candle. Gold, these are dailies. Gold, silver, and then copper. I'll get to copper last. These are all dailies. Silver's still on a tether, but it hung in there. If it can stay above here, twist and turn inside these two, twist and turn, maybe get these averages above the slow moving average on a daily. Maybe we can start to move up. The neckline, and the reverse, you can see the reverse head and shoulders. The right shoulder is being completed, and it looks like it's failing, but we also have knocking out the bottom here with that candle, and then an indecision here, which ended the week last Thursday. Let's just look at a monthly. It is not looking good for silver. Just looks like it's on a tether, doesn't it? It closed below the two previous lows on a weekly. Here's the previous low, closed below it. Here's the previous low, closed below it. Here's the previous low, and it closed below it. So it's looking bearish on the long term. But doesn't say on the short term we can't get a pop out of this thing and let it consolidate. Maybe we can get it to stick in between these two lines like a corkscrew. But this is forming, looks to me like a bearish pattern anyway. So we'll have to keep watching silver and gold. I'm not sure where this came from. I figured if it was a bad tick, it would have disappeared by now, but maybe it really did happen and it popped like that and then sold off. But I never saw that during the intraday. So yeah, on the daily, on gold, it's looking bearish. On the weekly, it's looking bearish. It's got to break this 3-bar pattern here, trend line. And it's pretty steep, so it's got no support. Likely silver and gold are going to go down, and gold below 1,000 is going to be a bargain. Like we always talked about, it's going to pop below 1,000 and then consolidate within this pattern. It could see its lows at 700, but there is a lot of support in this pattern that was formed. What was that, back in 08? So silver. Now copper on a daily, its moving averages are going above the 34. This is what I always look for when I want to buy something. Not necessarily on a daily, but look at that nice little hammer that knocked out a bottom and closed above the 34-day moving average. And it's carrying the 3, 5, and 8 above. I say on copper on a daily, if it breaks its previous high, then I would stay long. And if it fell apart, I would exit my trade right away. But if this stays above the 34, then I would stay long. That makes sense? That's your trend change. Now you're in a bullish trend. But anything can happen, so watch yourselves. Yeah, anything can happen. Especially when you look at it on a weekly and a monthly. Copper has a long way to go before it changes its long-term trends. But on its short daily trend, these are the kind of pops that I look for. This is what I call a launching pad, or oh, I forget the other term for it, but the probability on this, when this kind of price moves above on a weekly chart, if this was happening on a weekly chart, your probability is up in the 90% range to make money. So look for these kind of patterns on a weekly. You can do some serious damage. The probability is going to the dealer's table at 90%. You can't find that anywhere. It's actually above 90%, but I don't want to say I remember 98% chance of probability, but definitely high. I don't want to go that high. But see, it breaks its previous highs and you go long. But then again, watch yourself, because the weekly and the monthly are very, very weak. So I would actually see on a daily to watch it go to the previous lows. So you sell into resistance. That's the rule. You sell into resistance. Your resistance is going to be about 225. So you break the previous low, or the previous highs, and you take a ride to the previous lows, and that's your move. But on a weekly and a monthly, those moves become longer and more profitable. But again, watch price move over the 34-day moving average, consolidate above the moving average, and then watch for it to break previous highs, and then you're long. And there's your previous low. So not a big move, but certainly well worth the 90% probability rate of success. So that's what kind of move we're looking for. You can play all day, try to master the daily moves, but once this starts happening on the weekly, I might even consider moving back in and making some money. But I don't have any money in here. I buy physical. That's about it. So there you have it. That's my monthly review for the months ahead for 2016. Let me know what's going on out there. Please share, comment, and let me know what's going on out there. And thanks for watching.